Welcome to the daily update, where I'll go over the action in the market from Monday, August 25th, and we'll see how things look for Tuesday, August 26th. All right, well, we had that powerful update on Friday, and things were looking to shift back over and look more positive, but we didn't see any follow through on Monday, and we're still below overhead resistance with the S&P, but we're also still positive on all three time frames. So below average volume, a little bit of a pullback, late day selling going into the close. We'll see if the market can pick up and start looking a little more positive going forward, but we'll have some interesting things to digest as we go throughout the week as far as economic reports, with the big one coming on Friday with the core PCE report. So right at the open, we had a flat open. The futures weren't really doing all that much before we saw the open. They were a little more negative, and we actually drifted back and were able to open flat. And we just slowly climbed. There wasn't a lot of gyration after the open. We climbed up to resistance at the unchanged level. And then as the day went on, prices steadily declined going into the close, and we closed down below the daily pivot. So we set the low right at the close at 64.43. We were down 0.43%, way below average with volume, and we're still positive on all three time frames. And interest rates ticked up a little bit. The market still has this background concern about inflation. We'll see if that gets dealt with as the week unfolds, specifically on Friday. No real news as far as it relates to the tariffs and trade deals and those kind of areas. So it's kind of a light day in that regard. So mega caps and growth outperformed. Now they weren't really strong, but they held up better. And this is one of the things I was pointing out over the weekend. Last week, and even going back to the beginning of July, we've been seeing days where value would really outperform growth. And that's when a market is getting ready to be more defensive. And then we saw that Monday through Thursday last week. But then Friday, it's not that growth had a great day, value had a good day too, but we're still seeing more of this defensive posture. Well, it held up a little better in Monday's session, but it hasn't really improved things. The market still looks like it's getting more defensive. And then, of course, we had the big update with the small caps and mid caps on Friday, and they were down in Monday's session. We only have one thing. There's nothing in the short term, so there's no conviction, really either positive or negative, according to the indicators that we look at. We still default to positive because of the moving averages. But then we switch over to the intermediate term and we have the Sean trend meter. And even it's declining a little bit, but it's looking still pretty positive overall. No change to the overall scenario. The big news was last Friday when Jerome Powell came out with his speech, and the market really liked that, leaving the door open for a rate cut in September. The dollar was up, which could have pressured stocks as well, and interest rates were up not too much. We closed at 4.28% with the 10-year yield, where we were at 4.26% after Friday. Sentiment is positive. It ticked down a couple of notches, but we're declining, so that part is negative. But when you look at the number by itself, we're still coming in at 59, and we're still positive with the trend, but the ADX is below its moving average, both in the short and intermediate term. That suggests a weakening trend, but the green line is above the red line, so it's positive. With the down day, the bias is negative, and I'm still keeping the momentum at mix. Now, we were looking more negative last week, Monday through Thursday, and that's what switched things over to mixed. We were still hanging on to being positive, and then we had the big update on Friday, and that kind of threw it back to just looking mixed at this point. So we had new home sales come out. That was the only report. Now we're going to get more reports throughout the week, but new home sales were down 0.6% month over month. When you adjust that on an annual basis, we came in stronger than expected, 642,000. They thought it would come in at 630,000. Last time it was at 656. So down a little bit from the previous report, but better than what they thought was going to come out. On a year-over-year basis, though, that equates to a negative 8.2%. So here is a chart of that. New home sales, and this is the annual chart here, where it's actually coming down. It's been real choppy. And as we saw interest rates going back up and housing prices just going through the ceiling, we've seen this kind of sideways action overall with new home sales. Then the 3 month average for the home price is actually coming down a little bit, but it also has been chopping along sideways for the last few years. Then when we have a pretty solid up day like we had on Friday, they say it was a very rare and potentially bullish day. How do things look going forward from there? And this is the Carson chart, and you have the 1 month, 3 month, 6 month, and 12 month returns, and we're clearly positive on a percentage basis going forward with pretty respectable returns. Of course, the farther you go out, the better the return looks. And you hear these green diamonds here are when these things have happened. We didn't see any follow through on Monday. We'll see if we get any more follow through from that. And valuations all over the place. And I stated over the weekend, and I continue to state this, we don't use it as a timing mechanism because valuation doesn't seem to matter until it does. So we can't go with that. That's too ambiguous. It's like there's this thing lurking in the background, and then when things start to turn more negative, they blame it on that thing in the background, but that thing in the background was always there. And so we're still getting very high here. And you can go back to 1929, of course, a very famous time. 1999, that was the dot-com boom topping out here, and we're getting high again here. But if you can justify it with earnings still going forward, the market seems to be okay with that until it isn't okay with that. All right, here's another look at valuations showing the Nasdaq 100 up at 28 with the PE ratio. That's well above the 20 level. And I point this out every time. I use the S&P 600, and that's right around 15, 16 or so with its PE ratio. Well, the Russell 2000 small caps, they're at 23, again above that 20 level. The S&P around 22, and then you get more fairly priced when you drop down to the equal weight. And then the mid caps, which are underperforming. If you watch the deep dive video over the weekend, they're in last place right now and not doing all that well, even though they had a good day on Friday and they really improved. They're still the worst performing index right now, with small caps and mid caps kind of fight back and forth to see who's doing the worst. All right, then top down forecast here. Since we had an update, Goldman Sachs was in a good mood, and they are predicting that we're going to go up here to 6,600 and then eventually up to 6,900. Okay, we'll probably get there, but if it's going to be a straight line up or not, that's to be determined. And what justifies that are the earnings actually going up to justify those higher prices. And then we get above this lighter blue line here with the dark blue line, and that also shows that we're overvalued as well. Just another way to represent that. Probabilities of a recession still pretty low overall. It really dropped off, and we're just kind of leveling out now with the latest reading here. Dollar gauge tests trend support after Powell's speech. So here, going back to the beginning of July and then connecting this other low, as we've been really weak with the dollar in 2025, and then projecting that forward, we did come down. Now, are we going to get much of a bounce off of this trend line? We did go up on Monday. Are we going to be able to go up from there? That could put some pressure on stocks too. This doesn't go back to the beginning of the year, but you can see as the dollar has been coming down, that is when stocks started to go up. And that's been helping stocks to go higher. If the dollar ends up going higher, is that going to help stocks go down? And I went over this in the weekend video here. The next time the Fed meets will be on September 17th. And right now there's a 75% chance that they're going to cut rates by 25 basis points or a quarter of a percent. There's still 25% here thinking that rates are going to be the same. But there's about 3 weeks to go until we have that meeting, and a lot of economic reports, including we have core PCI coming out, core PCE inflation coming out on Friday. We have the employment report coming out. There's lots of other reports between now and then that the market can freak out about and try to adjust the probability of what they think the Fed is going to do. Realized and consensus earnings per share growth for the selected. Okay, the S&P 500 coming into 2025, we're actually coming down a little bit, but they're projecting it up going into 2026. Also going up with the equal weight. That's still looking positive there. That justifies that going up. And the equal weight did set an all-time high in Friday's session, where they're actually seeing it coming down a little bit. And this is a big growth area, the NASDAQ 100, still positive for right now, but dropping off. And then here's where the mid caps and the small caps, they're just going to go to the moon looking forward as far as earnings. Well, they've been predicting this now for the last number of years, and it really has yet to happen. Okay, tax refunds. We will see an even larger crop of personal income tax refunds early in 2026 than was anticipated. These higher income tax refunds should work like a new round of stimulus checks, okay, because the tax cuts have now been made permanent. So folks are going to be getting more in the way of refunds, and a lot of that often finds its way into the stock market. Okay, the Mag 7 against the rest, both ratios have bounced back after a nasty stretch of underperformance, but they remain below prior highs. This is just showing how things have been improving and now we're pulling back right now. It makes sense to keep hunting for opportunities outside the usual. So, okay, I don't do that. I don't do individual stocks. I do everything right at the S&P 500 level. That keeps me busier than I have time to do things. But I know a lot of you watching this video, you do end up settling on individual stocks as well, and you might find some good ones in that mix. Breadth thrust, two key breadth thrusts. Now, we did have a ZWAG NYC breadth thrust earlier on, and that's still on the books, and that has a really good track record going forward. Here's an update of that in the top, and then how we've been doing the red line, and then what the average is going forward from here. And then we have the current 20-day breadth thrust against the average. Also, these are two breadth thrusts that are looking pretty solid right now based on what happened on Friday. Earnings per share outlook, looking at into 2026 after it had been declining, now it's starting to go back up. That is positive for the markets as well. And then looking at the red line here, which is the bottom up forward earnings per share, that's as of last Thursday. Here's the chart. So we pretty much it was flat. Now we did end up opening lower, but we didn't see a lot of gyration right after the open like we usually saw, and certainly not like what we saw on Friday. But usually there's a lot of kicking around. It really didn't go all that. It just ended up being sideways here. But then we were able to chop our way all the way up to the unchanged level, which in Monday's session acted as overhead resistance. We just about hit unchanged. Then that's when the smart money came in and we saw more, and it was pretty orderly here, but a steady decline and then dropping down below the daily pivot at the close and ended up closing at the low for the day. And we're not seeing much of a change in the overnight session right now. We didn't really see all that much. We were getting a little bit weaker when the futures opened Sunday evening, and then we were able to come back up. That's where we saw it was a flat open, but it was a down open, and then the move up during the day, and then the move down going into the close. And we're seeing value pulling back a little bit here. The red line was really above the blue line on the intraday chart after Friday. They're matching up a little bit more with each other now. So that's why I'm saying growth held up a little bit better in Monday's session. And we're improving here as well. We're seeing some of the moving averages starting to go up. Now, we want to see this continue to go up if the market's going to have a shot of breaking above this overhead resistance and setting new all-time highs. Not looking that way in Monday's session, and it may end up happening. It may not happen at all, but we are seeing a bit of an improvement here with the intraday growth to value chart for the S&P. So growth was down, but down quite a bit less. Value got hit pretty hard there. Growth was actually down more for the mid caps and down more for the small caps. So we're still seeing more of a trailing off here when we look at small cap growth to value, still below the 50-day moving average with mid cap growth to value, and still looking a little weaker here with S&P growth to value. We want this line to be above both of these moving averages here and going up to be more positive. And it really, even though it held up better on Monday, we're not seeing any kind of a really big shift at this point back to looking more positive. And we're still kind of down inside the upper end of the rainbow when we look at this growth to value ratio. Now, discretionary did do well, and staples were down and discretionary was up. So we saw a little nice move here with the discretionary to staples ratio. That's encouraging, but that hasn't been what we've seen for most of 2025. But if you remember back about a year ago, when we had the end of the world day and the VIX hit like 65, and it was because of what was going on in Japan, and everybody was freaking out. Right after that, and going into the end of 2024, discretionary was the best performing sector in the market. Are we starting to see something like that develop? Because discretionary has been really improving now. Now, we didn't repeat with the decline because we declined in 2023 and 2024 in the middle of July and then went up from there. That hasn't started yet. And here we are getting beyond the middle part of August, still waiting for any kind of a decline that may happen. So I'm trying to compare two different things here, but our staples going to be able, excuse me, our discretionary going to be continue to perform well as we head later into the end of the year. All right, here's our trend, still weakening, still below the moving average in the short term. The black line, it is leveling out here. That's the ADX, but it's below the moving average. But the green line is still above the red line. So short-term trend is positive. Still below the moving average with the intermediate term trend with the green line above the red line. Dropping off as far as volume is concerned, and we're back to kind of a big looking downward red below average mark on the histogram chart here. And sentiment coming out, we're just coming down from the extreme positive area back into the positive area at 74.79. Getting a little bit more bearish here with the legal insider transactions ratio. When this red line's going up, that can quite often put some pressure on the market. And I haven't shown this in a little while. This is the insider buying ETF. And there's some folks that really like this idea of, okay, if corporate officers and CEOs, people that really understand the company, if they're buying their own stock personally, then that's what I should be doing too. And they have an ETF that lets you do that. The only problem with that is there's a delay from the time that they actually do it. They have to report it. And then when it is reported, there can be a pretty big lag time. But there are folks that really agree with this kind of investing, and this has been doing quite well lately. The VIX did tick up a little bit here, but we're still seeing a lower range overall. We're back into the high 14s, but not a real increase in fear. Still below the moving average with the line chart and below the moving average with the bar chart. This is what we've been waiting to see unfold that has yet to unfold to this point is the VIX really going up, and that would mean stocks are going down. And really dropping off here with the VIX of the VIX, the volatility of the VIX we're still below the moving average, even though on a closing basis we ticked up, but we're also below the moving average. So we ticked up a little bit with this fear gauge with the down day and a little bit higher here with this other fear gauge. A little bit of fear coming back into the market. Also seeing a little bit of fear coming in with the equity put call ratio daily chart going up. We're going back up with the 5-day chart, which tends to be more negative, but we're still declining with the 10-day chart, and that tends to be more positive, a little longer term there. Volatility risk premium is dropping off and coming to the lower end of the band, so no real fear coming in that way. And we are doing okay here with the advanced decline line. In the bigger picture, both based on price and volume, but you can see where we were down a little bit more based on price, a little bit less based on volume. That could actually be positive. Now, I was pointing out over the weekend where we saw price leading volume, and that can be somewhat negative. Now, and that's just what we're seeing. We don't really know if it's going to lead to anything. I just want to point out what I'm observing at that time. Well, we're kind of seeing a reverse of that now, where volume didn't decline quite as much as price did in Monday's session. But again, in the bigger picture, we're above advancing moving averages. So we're looking good there. And we're kind of chopping around here with the advanced decline ratio, but still above zero. And came down a little bit with our advanced decline oscillator, but still above zero there. And trailing off with the new highs, but we're still going up with the 5-day chart and the 10-day moving average chart as well. And we did decline, so we're still positive in the bigger picture with accumulation distribution, but we're coming right back down to the moving average with the boom indicator. And now we're drifting down a little bit. This Chaikin money flow has been really choppy. Once we got into August, just kind of blah, 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 just going along sideways. It was slightly going up after Friday. Now it's slightly going down after Monday. And we're back to looking more negative. Where we were positive after Friday with the Chaikin oscillator, now we're back to looking more negative. But the vortex going up with the green line, but the red line came up as well. But the green line is still above the red line, so we are positive. And I showed this over the weekend, but it really improved. And a lot of this is picking up Friday's strength. This is a 10-day average of the highs and lows for the S&P. We're above the green line. Now, one way you can interpret that is we're getting overextended. Another way to interpret that is that's showing longer term positive momentum because we can stay up in this area for lengthy periods of time. And even though we declined, we're still above the moving averages here with all the indexes with our advanced decline line studies. And we did come down. We were getting pretty high there with those stocks in the S&P above their 20 period moving averages. We hadn't got up to 80% yet, but now we dropped down to a little bit over 70%. Came down a little bit, but still above 50 with the 50 period moving average study, 100 period moving average study, and 200 period moving average study. And this is some of the daily overhead resistance that we've been dealing with. These are pivot points, and we came right up to this level, went sideways, then we started to decline. We came right back up to these pivot points after Friday, and now we're dropping down just a little bit from them. But in the bigger picture, we're still in an uptrend, even though we're seeing volume really dropping to below average. And we were almost extreme here when we look at the 20 period exponential moving average of the S&P. We came in at 79 after Friday. Now we dropped down a little bit, but we're still well above 50. Also declined a little bit with the 50 and 200 period moving average study, but all of these are still above 50, so they're considered positive. And we were crossing above the midpoint with the Stochc RSI. Now we're crossing down below it. So not seeing any conviction there. We were showing some positive conviction after Friday with the Williams percent R. Now that's dropped down to not showing any conviction. I'm still above the midpoint, but no extreme reading with the CCI 14 or the CCI 20. And we're not extreme anymore. We were with the short-term stochastic after Friday. Now we're dropping down. We're going back up, crossing above the moving average, but not extreme with the intermediate short-term stochastic. And we're still dropping down slightly below the moving average with the long short-term stochastic. And came right back down to the midpoint with the force index and just seeing a little choppiness here, but we're still tending to go up with the short-term trend based on 20 periods. And we came down into the upper end of the +1 channel with the standard deviations chart. Intermediate term still above the midpoint here with the balance of power. Still looking positive with the darker blue bars with the go, no-go system. Still coming down off of the highest high value here, but the blue line is flattened out a little bit. More positive environment. We see this blue line going up, but that just also confirms the overhead resistance that the market just can't seem to break through, at least yet. And we're at day 80 now with this uptrend, according to the Landry Light, which started back at the beginning of May. We're still positive with the proper order. We're still positive with the TTM squeeze, darker blue advancing there. And still a little bit further above zero now, but we've been just flatlining for the most part with the ease of movement. And going sideways now, but still above zero with the Arun oscillator, showing how the buyers are dropping off, but the sellers are dropping off as well. The difference between the two is the oscillator, and we're getting a positive result there. And we dropped negative again here. We went above zero on Friday with the S&P McClellan oscillator. Now we're back down to below zero. So really choppy with the summation index. Not an awful lot of conviction as we entered into August. And we're also declining here based on volume, where we were looking positive after Friday. And we did decline, but we're still slightly above zero with the NYSE McClellan oscillator. So we're still kind of going up here with the summation index based on price and volume. So this suggests the broader market actually held up better than the S&P in Monday's session. And we're back to looking negative again with the Sunland Trading Oscillator. We're declining based on price and volume. Momentum is still negative. We're going down with the PMO. And we're actually looking okay here based on price. And this is part of the negative divergence I was seeing. where we're holding up a little bit better, where we're actually below the moving average and showing more weakness when we look at this based on volume. So a little bit of a drop off, but still below 50 with the PMOs that are rising. We're still going up with the buy signals, and that's above 50, and we're leveling off at a respectable reading here with the PMOs that are above zero, coming in at 67%. Still positive with the Elder's Impulse system for the S&P, still positive with the parabolic SAR. We are improving with the short-term oscillator, the slope. It's coming above its moving average, but you can see it's pretty flat. It's not showing an awful lot of conviction, but it is looking back to being more positive, where we're still below the moving average with the MACD, which is more short to somewhat intermediate term. So that's negative. But we're seeing a difference here. The slope oscillator is looking more positive. That's a short-term oscillator, where the TSI, that's still negative and below its moving average. So these are not confirming each other. And we're still below the moving averages with our three intermediate term momentum oscillators, and we're still declining and flatlining a bit here with the two long-term oscillators. Still barely positive though with the Copic curve. So not seeing an awful lot of confirmation there. We did decline, but we're in the upper end of the green or the darker green area here. That's why the Sean trend meter is the only thing on the list right now that's looking extreme. And even it declined, and even it could go higher up into an even darker green area. Still above 50 with the money flow and above 50 with the ultimate oscillator. Still a little bit below the moving average with unbalanced volume. And still above 50 with the intermediate and short-term RSI charts. And holding up okay. We just came down to the 10-period simple moving average here with the bow tie. So we're still holding at this support level and still tending to go up with the red line and the blue line with the intermediate term trend based on 50 periods, still above all the moving averages, still going up. This is probably the most positive thing that we saw on Monday was the bullish percent index for the S&P continues to go up and it's above its moving average. We're still going up with the NYSE bullish percent index, and we crossed back above 50 with the NASDAQ 100 bullish percent index. And here's the Pring bottom fisher that was generated about a week or so ago. And that is still, again, I wouldn't use this independently. I would use other charts to confirm this, but this is still giving us a buy signal. And this is, to me, probably the biggest thing that's happening right now. We just cannot get above this R1 pivot point at 64.68. We were dealing with this a week ago. We dealt with it last week. We were above it in Friday's session. We ended up closing a point down below it by the time we closed on Friday, and we didn't even threaten it in Monday's session. This is a pretty big deal. Now, the fact that we haven't broken above this, that can be taken as negative, and it still counts as overhead resistance. The fact that we came up to this level and haven't hit it and then turning on the other way, that can be taken as positive. So we're holding up fairly well here. And we're waiting to see if we're going to be able to break above this. Now, this is a weekly chart, so we might get above it throughout the week. It's where do we close by the time we finish on Friday? Are we going to be above this 64.68 level, or are we going to be down below it? The last 2 weeks, we've been below it. And still at the upper end of this trend channel here, which is also acting as overhead resistance. But we're still positive with the Heiken Ashi chart. We're black and pointing up. That's positive with the Kagi chart. Still positive with the Renko chart. Still looking negative, though, with the three-line break chart. Long term, we came down just a little bit here. We got a little overextended longer term. We were getting above this red line with the 150. We were right at the red line with the 200-day moving averages. They declined a bit in Monday's session. Still positive on all time frames with all the different indexes. The dollar's still negative on all time frames. Commodities are back to being positive on all time frames, and we still have bonds that are negative in the long term. So we saw energy and communication. Now, energy you could say is a growth area, but it's typically a defensive area. It was up, and communication was up, where all of the other sectors ended up being down. Now, what helped is that staples were down and discretionary was up. That helped the discretionary to staples ratio improve, but not a real positive day on Monday. So we did start off kind of positive with industrials having a BPI cross above 70, but then we had a bearish MACD crossover with the staples, which could be positive for the market. If we're seeing some weakness in staples, that's defensive. And then the Nasdaq got above 21.5 there not too long after the open. So we did pull back under this pivot point here with the Dow after it set an all-time high on Friday. And we've gone from positive to neutral with the diamonds looking at the Elder's Impulse system. Still have this overhead resistance here with the Nasdaq. And it wasn't down all that much, but we're waiting to see. We held its support at this other pivot point, and now we'll see, are we going to be able to get back above this overhead resistance pivot point here? And we're seeing a convergence of that with the S&P, the Nasdaq, and Nasdaq 100. But we're still positive with the Nasdaq with the Elder's Impulse system. Here's the Nasdaq 100 also showing overhead resistance at the pivot point after finding support here at this pivot point and then bouncing up from that and going from positive to neutral with the Qs with the Elder's Impulse system. We're still negative with the momentum though, and that's a longer term negative divergence. As the NASDAQ 100 was going up, we saw the PPO going down. And the Q's right at their 20-day moving average. We lost that last week. We gained it back on Friday. We're right back down to the 20-period moving average after Monday. And still a little bit above the trend line here with the weekly chart for the NASDAQ 100 going back to 2009. Still, we're just about ready to see a golden cross here with the S&P 600. But we gave back. We had that really powerful update on Friday, and now we're coming back down to this pivot point. And we also declined with the Russell 2000 small caps, but they already established an uptrend at the beginning of August. And still positive with the Elder's Impulse system for the small caps. We did decline with the mid caps, still in an uptrend though, and still positive with the Elder's Impulse system. Setting an all-time high on Friday with the Wilshire, but then pulling back 0.46% on Monday. Also pulling back a little bit with the total U.S. stock ETF. And down a little bit with the financial sector. And as I say all the time now, this chart looks good all by itself, and it set an all-time high on Friday. It's just continuing to underperform the S&P. Now, it did improve, but we still have a ways to go to get back to these moving averages with this ratio. And still holding out above the 50-day moving average and was actually up here with the FANG index in Monday session. And so we had Amazon down 0.39%. Apple was down a little more than 0.25%. Still dealing with the 50-day moving average is Microsoft and bouncing off the moving average with Meta and still above the 50-day moving average with Nvidia up over 1% there. And really choppy, but Tesla was up 1.94%. And Google says, I believe that looks like a new all-time high here. It was up over 1%. Netflix still kind of dealing with its 50-day moving average, and now the blue line has started, it's continuing actually to flatten out, even though it was up over 1%. We are seeing a bit of a drop down here with the Staples to S&P ratio. That's positive if this ratio continues to decline. And not much of a change here with the short-term correlation between U.S. and world stocks. Still seeing a gradual strengthening of the correlation longer term. And oil was up, getting into the upper 64 range now, back above the 50-day moving average with the US dollar index. And not much of a change, but coming down a little, actually going up a little bit here with the 10-year yield, coming down a little bit with the 10-year based on price. And this is where we're seeing some other weakness as well. The Q's to S&P ratio, it turned up a little bit, but still below a declining moving average. Where now we're seeing discretionary to the S&P show some strength, turning up, it's still below the moving average when we look at large cap growth to value. So coming back up to the moving average, but still below it with the large caps, flat with the mid caps below the moving average, and still declining below the moving average with the small caps. All right, so we're still positive on all three time frames. The market is still, we can't say that it's shifting back to an offensive mode. It's still leaning more to becoming defensive. And we still have this overhead resistance at the 64, 68 level for the S&P. And then Nvidia, that's going to be the highly anticipated earnings report that comes out. It's like what Intel used to be during the dot-com boom. Nvidia has pretty much replaced that now. And that we've seen both ways there. Nvidia can come out with a really strong report and we gap higher and then tank for the rest of the day, or it actually adds to some strength to the market. So That's why I don't do earnings plays. I know a lot of you that listen to this video, you probably do those. I don't, because you're just rolling the dice as to how things are going to actually end up reacting. And we're going to get durable goods as well as consumer confidence, the FHFA housing price index, and the S&P Case-Shiller home price index. So some housing data is coming out as well. And then anything geopolitical that may happen, not much of an impact in Monday's session, but that could always change. Then we have pretty light day on Wednesday, just the weekly mortgage applications index. And we're going to get the second look, and this should be a two, not an at here. The initial and continuing claims, and the second look at GDP on Thursday, and then the big one with the white C here is going to be core PC that comes out on Friday. So durable goods, that's pretty significant, and consumer confidence is also a pretty significant report that we'll get on Tuesday. Seasonally neutral to negative with the Dow for August 26, where we're neutral to positive with the S&P and Nasdaq. So not much of a real lean in one direction or the other that way. We do see during a post-election year a little bit of a bounce here, at least for the next day or so, and then we kind of end up going flat as we finish out the month of August. Still have yet to be positive in post-election years in August, going back to 1950. Wondering if it's going to be different this time. This also shows how post-election years in August are weak. And this doesn't include Friday's upward move here, but this also shows the weak seasonality, not only for August, but going into September and into October. So now we have our smart money indicators over on the negative side again. Now we're still positive with accumulation distribution. It's the boom indicator, the shorter term indicator that's showing some weakness there. We're looking negative with the Chaikin money flow and the Chaikin oscillator. And we're back to looking negative with the McClellan oscillator for the S&P. When that's negative, the summation index is also negative. The Swelling trading oscillators back to negative, and our momentum oscillators. Now the Copic curve is still positive, but I like to keep these all together, but even it's not showing a lot of conviction. And the momentum for the NASDAQ 100 is still negative. And we still have a Zohorchak method sell signal. I went over that in the weekend videos. It's at a -6, improving from a -10, but it's still at a -6. Positive signs there still are growth to value ratios. Now, this is the longer term trend. We're showing some shorter term weakness where we're really dropping down with those ratios, where the discretionary to staples is actually looking a little bit better there. And we're still barely above zero with the McClellan oscillator for the NYSE. So we're positive there, and that keeps the summation index barely going up. The parabolic SCR is positive, and the bullish percent indexes. These were probably the better looking areas of the market in Monday's session. And the ease of movement, money flow, and ultimate oscillator are still all above 50. The vortex is still positive. The financial sector by itself, but still continuing to underperform the S&P. And we do have that Pring bottom Fisher buy signal. And then I showed this over the weekend as well, the long-term special K chart. That's a very long-term oscillator that continues to be positive, and the weekly chart is also positive. And here are the pivot points for Tuesday's session. So our conclusion, we're still positive, but we're dealing with this overhead resistance right now. And we'll see, is the market even going to be able to test that? If it tests it, is it going to be able to close above it? And then by Friday, is it going to be able to stay above it? We are positive, but pulling back now in the short term. We were starting to see a shift back and looking more positive. With the down day on Monday, there's now not much conviction at all. And I'm just saying we're flat out positive here in the intermediate term, but not really seeing any strength, but not seeing an awful lot of weakness either. And we're still positive in the long term as well. Thank you. I hope you found this helpful. Have a really good day, and I will talk to you in the next video.